Hi, folks. Dan Bird here on Monday, April 21st, after the long Easter weekend. I hope everyone had a very nice weekend. But as you can see, what we came back to was the market falling once again. And who knows if there's any end in sight. I did some sessions over the weekend. I did one on Friday when the market was closed, where I walked through each of the daily routine. And at the end of it, I said, the jury's still out. There's really no indication yet that the bottom is in. Even though some of them looked like they were starting to bottom out or getting near the bottom, there was nothing to indicate that it was ready to start to move higher. So I'm going to cover a little bit of that again because I want to make sure that it's clear of what I was talking about on Friday. As always, I am not a financial advisor, so anything that I say is for educational purposes only. And I'm not making any recommendations for buying or selling anything or where the market might go. So let's take a look where we are. First, we'll go to the home page. Oh, by the way, this is something StockCharts.com which is what I use for this website. Pretty much all the charts that you see that I use and that are on the site are from StockCharts. Very, very good platform for technical analysis. So they now have a sale going starting today and running until May 4th, until Star Wars Day. So if you come to my website, you can see the link right up here on the top. Just click on that and it will take you here. If and of course you don't have to do this, but if you're a first-time subscriber to Stock Charts and you would like to, if you use my personal email right here as a reference, that's what my Stock Charts subscription is set up under, then I will get 1 month at no charge. And I would very much appreciate it. But of course, you don't have to do that. You can certainly sign up. There's lots of value in Stock Charts. I highly recommend it. So on my website, you can just click on that link right here. It'll bring you to this page, and then click on Get This Deal. And you'll come to the Stock Charts page, and they'll explain the whole deal, as well as lots of other things about what they do. So really, really good platform. They do these a couple of times a year, so it's not very often. But I just want to make sure that all of my subscribers know that this is going on. So if you want to take advantage of it, it's the best time to do it. In fact, many times I will wait, even though I have a subscription already, I will wait for these specials to come up, and I will just extend my subscription and get the extra 2 months on top of that. I think right now I'm probably out till the end of 2026 or something so far. So I like to do this. I like to just extend my subscription whenever these free months come up. But if you're brand new, you can sign up and get that advantage as well. All right, so let's take a look. Go back to the website, and market bias chart just going sideways right now. It actually did have more bears than bulls. In fact, a lot of those bears lately have been over here in the long-term column. You can see there's two new ones over here in the long term, a couple of new ones in the short term, and we do have 3 green ones popping up. So that's interesting. And one of those, by the way, is in Bitcoin. So Bitcoin's doing really well right now. We'll look at that in a minute. So that's the market bias. If we look at the individual charts right here on the homepage, the S&P went down again. So as I'm sure everyone knows, it did come back at the end of the day. So that is actually a bullish sign right there, even though it is a very bearish day, very bearish candle. It actually gapped down at the open, sold all the way down here, and then at the end of the day pulled all the way back. So buyers started coming in. Don't know if they're going to continue to come in, but there's still a lot of work to do. We're going to look at a couple of other things as well to see how close to the bottom we might be. I mentioned the death cross last week, so I did a whole session on that. You can go back and take a look at it. The low is over here, though, so we have not come down to the low yet. So now what we're looking for is a higher low. So we've got a lower low, another lower low. What we want next is and you don't know until this turns around and clearly starts to go higher. In fact, the best thing is to make a higher high. So it has to get up above this level and above the 21-day and above the downtrend line. So a lot of work to do, but that's what we'll start watching for. And you can see the volume today wasn't really that. It was actually less than average, lower than average on this big down day. So could be that the downtrend is running out of steam. That's what I think might be happening. We'll look at this in some other ways. Actually, let's look at right now. One of my favorite charts that I put on here is with the oscillators, and this is where you can identify potential bullish divergences. Now, for a bullish divergence, you want to see it come down lower than previously. So we had a lower low here and a lower low here, but these were going down at the same time. So that is not a divergence. What we want to see is for this to go down. If it does not make a lower low, if it stops somewhere, around here, and then starts to go higher again, then these will probably start to go higher. In fact, they might already be going higher. That is not a divergence. That is what they should do. If this goes higher, these should go higher. So divergences don't happen very often, but they can be very valuable to keep an eye on. But they truly have to be a divergence. So here's one right here. You've got a high right there and then another higher high. In fact, these were all-time highs. And the oscillators made lower highs. This one was a higher high, but this one here is a lower high. This one here is a lower high. This one was kind of even. But that is a bearish divergence. When the price makes a higher level, but the momentum indicators do not. That is a bearish divergence signaling that a downtrend might be coming, and that's exactly what we're getting right here. So that's what we'll keep an eye on that. And I'll point them out if I see any. Not seeing any yet, but it is encouraging that after this big down day right here, and it felt pretty bad, didn't it? It felt like, we were just going down much lower than we had been before, but we're not. We aren't really maybe even halfway through this run right back here. So it's not back to the lows again. We came down a little bit, but it's on much lower volume. So let's see what happens tomorrow. And we got a nice little bump at the end of the day. I'll show you that a little closer up here in a minute. All right, so that's the S&P. Let's look at the NASDAQ 100. Should be similar, same thing. End of the day, got to bounce back up, low volume. So looks like still lots of selling, lots of reasons that the market thinks that it wants to go down. Bitcoin, though, actually went up. Look at Bitcoin right here. It's right below the 200-day, so it's trying to break out and actually has a little, you can just kind of see it right here, a little inverse head and shoulders. Let me get a closer view on this. So inverse head and shoulders a little bit. We've got a left shoulder, right shoulder, head right here, and the neckline is right across here, and it's sitting right at it right now. So I'm going to actually put that on here. So it will be on the site. So the neckline is roughly right there. Roughly. Bring this down a little bit. I'd like to put it at the closes. So we're sitting right below it. And this is the death cross up here. So we actually, Bitcoin actually went up and touched the 200-day and then pulled back. So that's a little different than what we just looked at on the S&P and the NASDAQ. This is the opposite. It had a little bit of a bearish pullback right here. But that might be good if it consolidates here for a little bit, for a day or two, and much higher volume too, better than average volume. If it consolidates right here and then pushes through this, then the potential target, this is very rough, roughly about 75,000 there and about 87.5 right there. So it's about 12.5. So that would put it at 110. 12, that'd be, no, about put it at 100. Put it right back up at 100 again. So that will be the target. So the target for that inverse head and shoulders is right there at 100. In fact, let me put another trend line in here, right at the 100 point, right here. That's the target. And you can see it's pretty solid resistance as well. Now, having said that, I did a session on patterns, one of the technical Tuesdays, if you want to go back and look at that. Patterns are not patterns until they confirm, and they don't confirm until it breaks out of this neckline right here. So this is not an inverse head and shoulders unless it breaks out. So that's what you need to watch for, especially above the 200-day. So if it breaks out above the 200-day and closes at that point, then it probably is going to run up here back to 100,000. That could be good for the rest of the market, even though Bitcoin lately has been acting inversely to the rest of the market. You can see it's already through its downtrend line, and it's already through its moving averages other than the 200, and it's sitting right below it. So Bitcoin actually might be signaling something here. Keep an eye on that one. Okay, let's go take a look at a couple of things that I talked about over the weekend on the charts page, especially in particular, the 10-year highs and low chart. So I talked about this on Friday, and I did so again on Sunday. And I said something very specific on this. Some people interpreted it as that I was being bullish. That's not exactly what I was saying. What I said was, this is a weekly chart. This is the new highs and new lows. So you can see down below, only 5 times has it been this extreme. And I drew a vertical line for each of these, as you can see where they were. Again, this is weekly, so each one of these are a week. So if you look at where the vertical line hits for each one of these, and this one just happened, but on each of these going back here, it's about 4 or 5 weeks before the uptrend actually really gets going. So I was not saying that we have bottom and we're starting to go back up. That's not what I was saying. What I was saying was, every time this has happened before, it has been just before a rally. I also said that in each of these cases, it took about 4 or 5 weeks before that rally even started. Right now, this week is week number 3. So we've got to get through all of this week and then 2 more weeks before we even see if this will be valid again. So it really is 3 more weeks out. So that puts us sometime in the beginning of May, which coincidentally happens to be the next CPI number and the next Fed meeting. The next CPI, I think, is going to be very low. I think inflation is going to be dropping significantly. In fact, we may be in danger of deflation as we get past the summertime. And we'll see what the Fed does. The Fed could be behind the curve once again, trying to fight inflation, which has pretty much been conquered. Now, I think deflation is going to be the more important component for a few reasons. Now, besides the 12-month window, which, by the way, is right on the website under CPI headline. You can see right here, this is the next one in May. So when a big one, this is a 12-month moving average, 12-month average. When a big one drops off and a small one gets added, it's just math. Then CPI goes down. So we had a big one dropped off last time and a smaller one added. So CPI went down. We've got another big one that's getting ready to drop off right here. Commodities are still dropping. So this is probably going to go down some more. You can see it went from 3 to 2.4 in only 2 months. So that's 0.6. If it did that again, it went from 2.8 to 2.4 in just 1 month. If it does the same thing, we'll be at 2% next month in May. And that right there could be the catalyst at that 3-week point, like I was just showing you right here, 3 more weeks away, which puts us right in the first week of May. which when all of this starts to happen. So we shall see. Now, there's another thing to keep an eye on and remember, and I showed this before, and it's on the portfolios page. On the monthly VTI basically is the whole market, the US market. So it's made up of the Dow, NASDAQ, S&P, Russell, and 3,800 other stocks. So if we look at the monthly chart for the VTI, what you see is when the momentum crosses below zero, and this is a monthly chart. So we are in April and it is not yet complete. So this was March, went below zero. You can see that these vertical red arrows are every time it went below zero in the past. You can see every time it did that was at the start of a downtrend. Okay. This is a monthly chart, so it takes time. These things don't reverse quickly. Even COVID was a very fast reversal. You see right here. But from the time when this first hit, it took 1, 2, 3, 4, 5 months before it really confirmed that it was starting to move up again. 2022 took almost the whole year, actually more than a year to start going up again. The actual bottom was in October, so it was about 9 months, 10 months total in 2022. But the thing I want to point out, and everyone should really remember this, every time that this happens on a monthly chart, we are in for an extended downtrend. It does not turn around and reverse right away. So we shouldn't really expect this to start to go back up right away. It's going to take time for that to happen. As long as it doesn't get below this line down here, then the secular bull market is still intact, as long as it doesn't close below that. And remember, this is monthly, so we have to wait till the end of the month before we know that. Came down close to it, but it bounced back up and sitting right at the 21. So I just want to make sure I point this out. Don't get looking at the day-to-day movement of the market. Don't get too excited when things start to go up, as they probably will. It will take some time to really confirm that we're going back into another uptrend, just like it did right here. Now, since we're on the portfolios page, let me show you the market timing strategy, the MTS, which is right here. As for those that have been following this, for those that are subscribers and following this, the long-term one, which is really what the whole strategy is about. It's the long term. It's meant to stay in a position for a long time. It was in the long position for almost a year and a half to take advantage of long-term capital gains. And then it went to cash. And now I'll actually show you exactly where that happened. And now it is short, meaning we are in these inverse ETFs. So if you're in the 3X inverse, you can see the returns down here. So 3X, the yellow equals the yellow, and the blue equals the blue. Blue one is the short term, it's a daily chart. But on the long term, it would be 22% gain since March 28th. So about 3 weeks, 22% gain. You can see on the weekly, the chart itself, exactly where these things happen. So the vertical blue is the go to cash, the red is go to short. Back here, blue was go to cash, green was go long. That was actually November 3rd was the date. And it stayed green all the way over here until the beginning of March is when it went to cash. So a year and almost a year and a half. So that was a nice long signal for quite a long time. Right now it is short, starting from right here, and we will stay short until we get a signal otherwise. And the next signal then will be a cash signal. So right here, this gets updated every single day after the close. All you have to do after the close and just look at it and see if it still says short, or if it says cash, that's when you would get out. Pretty simple, pretty easy. And then the daily one is right here, which is much choppier, a lot more signals. So you can see the cash and the go short signals right there. There was a cash, there was actually another go short that I haven't put on there. The date was 16th, April 16th. So I'm going to do that right now. For those that are StockCharts members, I'm just doing a Control D. Allows me to copy that line. And I'll move it over here. Right there is where we went short, April 16th. So that is the short signal. All right, so that's how that works. I did have a subscriber ask me to take a look at a particular chart. And actually, before I do that, let's look at the dashboard real quick. So equities clearly down, bounced back at the end of the day, though. Most of these, NASDAQ came back even more at the end of the day from 3 o'clock on. Not sure if there was any news out there, but 3 o'clock on, it bounced back. The VIX actually started moving back down. It made it up to 35, but it's still really elevated. So the VIX is still up there. Bonds, then the 10-year went higher, 4.4%. 20-year went lower, and the US dollar went lower as well. Gold, of course, continues to go higher. Silver kind of bounced back and forth. Oil was lower today. And then crypto, we've looked at it already. There's Bitcoin, made it all the way up to 88.5. Looks like Bitcoin is maybe starting a run. So on the sectors, is really a mixed bag on the sectors. Staples and real estate are defensive sectors. They're near the top. But technology, communication services are aggressive, and they're sort of in the middle, but discretionary, also aggressive, is at the bottom. So it's kind of a mixture, and you can see the advancers and decliners over here. Many more declining stocks than advancers. Here's the earnings for large cap stocks. This is the most recent was Ally Financial. I think they definitely missed. It says miss was 1,100%. That's huge. So it was estimated to have positive earnings, and they ended up with negative earnings. That's not a good thing for Ally Financial. American Express right here also reported Friday. Looks like they did okay. They went down today. Bank of America down a little bit today. Citi flat for the day. Celestica Technology, one of the only technology stocks in this group, kind of flat. Abbott Labs actually missed a little bit. Let's see what else we got. JB Hunt up slightly. Johnson & Johnson kind of flat. Nothing really moved significantly. Even Netflix, which had great earnings on Thursday before the close, or after the close, I mean, and while they had a really nice run in the beginning, it pulled all the way back. So it has a spinning top. Actually, almost a gravestone doji right there. So that could be a reversal. That is a bearish. That is a failed breakout, basically, trying to break out of this resistance level right here. By the way, again, for StockCharts users, what I'm going to do is I'm going to start right here, and I'm pulling the control key down, which allows the line to be perfectly straight. So that's the resistance. It got above it and then pulled back below it again. So could be a failed breakout. We'll see what happens. Everything else looks pretty good. Huge volume today and big volume on Thursday as well. So it could just be profit taking. So you really have to wait and see what it's going to do tomorrow. Really what the whole market's going to do tomorrow. Look like a little bit of a rally at the end of the day today. All right, let's take a look at stock that one subscriber wanted me to look at, which is GEHC. GE Healthcare. This is a spinoff from the GE company. And as you can see, this isn't even earnings. Huge. I'm not sure what the news was here. So something happened through here. I don't know if that was United Healthcare earnings. UNH has just been getting killed. Again today, UNH went down, big, huge downtrend again today, almost 22% last week when they reported, and then another big downtrend. So that's not the same same day as GE Healthcare. There's GE. So I'm not sure what happened right here, but it really just fell off a cliff. It does not look very good. Everything is below. All the moving averages are lower. Um, it it made it into the extreme on the Keltner channel and then tried to come back a little bit, but it's still below the 5-day moving average. So, and it's curling over. So it looks like it might still want to go down more. If I look at a longer term one, this is where GE spun it off. And just to see where support might be, it's probably right in this area here. Probably the open from the spinoff is roughly where support is probably at. Right about there. So that is 56, roughly 57. That's probably support. It may very likely get down there before reversing. Very low volume today on that red candle, but that does not look good. You can see this is a weekly chart, so there's that whole week right here, which is I think pretty close when the whole market was going down. It was hanging in there before that, but just really went down. So I don't know what to say on this one. This one probably is going to wait for the whole market to start to recover, move back up, unless they get some good news soon. Also, if we look at it on this chart is, I started with the IBD chart and then I've modified it a little bit. So this is the similar look and feel of Investors Business Daily, what they use. So these are the moving average lines. It's the 200, the 50, the 10 is what they use, and the 21. And you can see it's below all the moving average lines. The MACD momentum definitely going lower. This is the relative strength, which basically is relative strength versus the S&P, and it's down at below 25%. So very low. And this is the accumulation distribution. You see it's just being distributed. Everyone's selling. And this is the StockCharts technical ranking, which is down to almost just below 4 down here. So does not look good. Sorry for the person that wanted me to look at this. If you're looking to get in and thinking that maybe it's the bottom, I think it's probably close. It may not necessarily be the bottom, but if you're looking for it for a long-term hold, I mean, I'd really like to see these start to perk back up again. So you're taking a risk. If you are thinking of doing that, I wouldn't put my full position in this right now. Maybe put a third of a position and see what it does. It needs to get above all these. It needs to get back through the gap right there. There's another gap up there. There's lots of resistance all the way up. Now, if we look at this to see where the warning signs were, look at it on this one. So it came down and went below the 200. So that's not a good thing. But if you wanted to hang in there, it came all the way back again. And now here's the first big warning sign. Get to the resistance level and reversed and started going down, and 5-day crossed the 21-day right there. So that is a double top, hit resistance and got rejected. Then the 5 crossed the 21, the price closed below the 21. So that right there would be my big warning sign. There would have been one back here as well. But for sure, if you hung in that long, that would be the big warning sign. That would be the time to get out. It couldn't get through this, and now it's heading down. And then the 21 crosses the 50 right there. So it tried to make a run back up, but failed again. So that's the second warning sign when it closed right below the 200-day moving average. And then from there, it just continued to fall all the way down. Just for those that want to understand how to use the charts to figure out how to get out of a position that you've been in for a while, these are the warning signs to start to look for. All right, so that's it for GE Healthcare. Sorry, it's not better news, but that's what I'm seeing. One last thing on the charts. Let's take a look at the bottom finder for the S&P. So this, again, is something to watch for. You can see we're sitting right down. This is the support line from back here. sitting right on that support line, which is right around 5,100, 5,120, something like that. We ended at 5,158. The low was 5,101. So we went down to just about 5,100, bounced back up at the end of the day. Low volume, so that's good. You can see the percentage of stocks above the 20, 50, and 200, all three of these reversed and started going lower again. But again, what we want to watch for is a higher low up here, and then we want to watch these start to recover and go back up. Now, if that happens, that will not be a divergence, because this has to be lower and this has to be higher for there to be a divergence. But if both of these, if this gets down here and reverses and starts to go back up, and then this and these do too, then that's confirmation that a new uptrend might be starting. It still has to get through the 21-day and the resistance up here. But that's what we need to look for now. It's encouraging that it was on such low volume today. We still got a long way to go till we get back to the lows over here. 4,900 is where that was. So another 200 points. Of course, it went down 124 today, so could do that in 2 days. Also on the VIX, yes, did perk up today, but really not higher than it was back here. So that might be encouraging. The put call ratio actually is back up here close to 70 again. And this is the point, especially if it continues. If this goes down a little bit more and the put call ratio goes up to this area, the 70s, that's where bottoms usually happen. So what I'm looking for in this case, and remember what I said on the lows and highs chart, that we've got 3 more weeks before a potential recovery begins. That this could easily go down, make a higher low, even go sideways a little bit down here before it starts moving back up. That could easily happen over the next 3-week period. And if this goes above 70, then that will be the ingredients for a bottom if that happens. Again, I am not saying that it will. I am not saying that if it does, then we have definitely bottomed. That's not what I'm saying. I'm just saying those are things that typically happen whenever bottoms occur. It's getting close to looking the same way again, but it does not mean that it has to do that. Market can do anything that it wants. I'm just pointing out what the data looks like. So we'll continue to watch it. All right, that's it for today. Thanks everyone for watching. Hope you had a nice Easter. And we'll take a look again tomorrow. Now, just for everyone's information, I am going on a road trip starting on Wednesday. I am going to try to still do the YouTube channels and the newsletter. On the trip, it's a 2.5-week trip, so I'm going to be gone for quite a while. But there are some times when I might not be able to, depending on what we're doing. So just keep that in mind. Please bear with me. I will get back on whenever I can. And the newsletter right here that I will still try to continue to do it. It might be an abbreviated version for the next 2 weekends, but I will still try to do the newsletter as well. So hope everyone is safe, and I will talk to you soon. Take care.